The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got some red action on the board this week. Yeah, some negative action on the board across the board, basically. Not to use the same word too many times, but we got negative prices, man. It's been the trend this week, coming off the highs of 44.93 last Friday. We're more than 100 S&P points below that price level. You see the chart I got up here just on a 15-minute basis. Keeping in line with that trend right now as we're below 4,400. We're negative by 35 points on the S&P. Haven't seen a morning like that in a while. Although I will say the market has caught a bid and been pretty resilient on the open. I was talking about it yesterday, man. You put this thing back, just looking at some of the opens that we've had on Apple, Microsoft, et cetera, some of the equities. Each day, it seems like we've had a run to the upside in one way or the other. We'll see if we catch one today. But nonetheless, S&P's off by 0.8. You got the NASDAQ 100 off by 1.1%. You got the Dow off by 200 points. 34,000 on the dot. Dow just gave up 900 points from where it was a week ago. Russell off 1.3%, right? Off 25 points, trading at 1840. We jump over to crude. Look at that decline. Crude, 67 handle, 67.93. My goodness. Gold. Jumping in the other direction. Let's take that Fibonacci off there. Gold. Clawing back some of the gains. Gold up by $17. We jumped to notes and bonds. You got higher price and lower yield coming at you. You got the 10-year right now sitting right at about 3.7%. Interesting, right? 10-year. Basically right back to where we were last Friday. 113.13. You look at the volatility around Fed Day on Wednesday. You look at the volatility around Thursday when the market accelerated higher. We had the ECB out there Thursday as well. You got the 10-year right back up to that price level with a yield of about 3.7%. You got to jump over to the dollar index this morning. How about that, right? From a 101 handle to a 103 handle from yesterday. Pretty remarkable. 101.92 was the low early yesterday. We were just above 103. We're at 102.85 right now in the dollar index. We jump over to the volatility index. Finally catching a bid. We had a 12 handle yesterday. We're sitting right now at 13.74 as the market gets an acceleration to the downside, and we're going to put this a little bit longer context, right? All things considered, man, I mean, we're basically, just back to where we were almost 8 days ago after quite the run that we've had. You've given up about 100 points in the S&P, though, and boy, we got a gap in there sitting at about 4,300. Now, that was the gap when the futures rolled, but they were also higher as well. That's a futures roll gap, okay, when you're looking at it. But they were higher in there as well, to keep in context. As in, that is not a real gap for all stocks. That's when the futures rolled. And you're always going to get about a 40 or 50-point acceleration to the upside as those futures are priced higher because they're higher into the future, giving it more time, etc. All right, let's jump around. Let's see how some of the FANG stocks are trading before we jump to some of the news in the morning I want to get to. We jump to Apple shares. Now, this is the one I was talking about. Apple, every day catching a bid, right? Look at the opens. You go back to last Thursday. You accelerate on the open. Friday, well, it was a short-lived acceleration before you tanked. I mean, look at these opens on Apple, man, right? You talk about some volatility. This thing's got 16 billion shares outstanding, and it moves $1 or $2 right out of the gate every single time. And boy, you talk about yesterday, from almost 183 to 187 this morning. We're trading down about $1 on Apple shares at 186. That thing's got to get to above 190 and change, I believe. We'll have to figure out that exact number to hit that $3 trillion mark for Apple. Not quite there yet. We're at 185.68. We jump over to Microsoft. Microsoft shares, not quite the same story as Apple, right? You saw the acceleration in Apple. Microsoft, you're going to give up $5 just like that. How many shares they got outstanding? I should know. Is it 6 or 7 billion, I think, at this point? Yeah, 7.5 billion shares outstanding. For Microsoft, to give up $5. Just remarkable, man, when you think about the market cap implications of some of these equities and the way they move. Google shares, yeah, it's going to be quite a haircut on the open, man. Google's off $1.50 on the open right there. You jump over to Amazon shares. Amazon, you talk about a run yesterday from 125 up to 131 overnight. We're trading at 129.64 for Amazon. You jump over to NVIDIA. Yeah, look at these moves, right? NVIDIA gives up $6. overnight, just like that. Meta shares give up $4, just like that overnight. Yeah, NASDAQ off 165, man. Boy, you know, we don't talk to Kevin Hincks on Fridays, folks. We talk to him every Tuesday, Wednesday, and Thursday at 9:15, so we're not going to get to talk to him this morning. But as he was saying, right, you look at some of these equities in terms of Apple, Microsoft, NVIDIA, etc., the run that they have had, man. You know, yeah, Microsoft, Apple's down $1.50, folks, on my chart. That's where you're talking about. This thing has run $60. It's run $60, and we're not even halfway through the year, and they have 16 billion shares outstanding. Just remarkable in terms of how overbought some of them may be. I mean, that's got to be the quickest $1 trillion that's ever, and we're almost at that mark. I know are we at there? 66? I mean, it's really close. I'll do the numbers at the break, man. We didn't have $1 trillion company, folks, until I think 2018 or 2019, and Apple just added $1 trillion to its market cap since January 1st. So be careful in these markets, man. Even if you love these companies, you love the future they have. Apple just added $1 trillion. Microsoft just added about $800 billion. Yeah, what do they got? 130. They just traded up $130. Okay, and they have 7.5 billion shares outstanding. Yeah, I'll do the exact numbers. You're approaching $1 trillion here, $1 trillion there in a 6-month period. It's a lofty one, to say the least. Yeah, let's take a look at notes and bonds, too, on a little bit of a bigger picture. You got the 10-year right now, up by 22 ticks. We got a little bit of resistance right now. Support, I should say, at about 112.15. We're about a point above that level at 113. 113. You jump over to the dollar index right now. You get the dollar index. Yeah, maybe support around the 102 to 101 area in the dollar index, catching a little bit of a bounce off that area at 102.83. But all things considered, folks, I mean, why is the market going down? The market's going down because you got a little bit of selling after quite an acceleration, right? You're talking about a run basically from 3,900 up to 4,500. You had 600 points. You had over 15% to this index in a period of about 3 months. Remarkable, to say the least. All right, let's jump around to some of the other companies. Let's take a look at some of the travel stocks. Airlines, they've been on quite a run recently. United going to be down $1 with the market. I'm sure they like lower crude prices, but not helping them out as you get the market selling. Yeah, Delta. Look at the run Delta's had, right? Even JetBlue I had taken a look at. JetBlue from $7 to $8. We take a look at Carnival. Boy, these trend lines, folks, you know. I mean, pretty remarkable how. And there would have been a couple false breakouts, okay? You would have gotten stopped out here, there, wherever. You put your stop in place, whatever it is. But look at this breakout. I've talked about this on Carnival before. Think of our man, Bud Rolfs, man. Love him, miss him tremendously, always. And if you don't know him, he was a host, a newsletter writer at TFNN. He was the channel master, folks. And he loved channels, and I learned so much from him in his channels. And he would talk about, you know, it's not when it breaks out of the channel. It's got to break out, come back, test that channel, and then maybe that's the breakout, right? That's the test that you need. But look at this channel line in Carnival, man. Okay, you come into COVID in a pretty well-defined channel line. You accelerate out of COVID. What do? You come right back to that same area and test that channel. You chop around till you reach 611. You chop around at the upper boundary of that channel line for about, what, 4 or 5 months, and then boom. You trade to a low of 870, and you break out, and you basically almost double in price. Stay tuned, folks. We're coming back. We're going to talk a little bit of chicken and a little bit of beef. Stay tuned. I'll be right back.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. Welcome back, folks. We got the S&Ps down 35 points this morning. Going to be an interesting, spicy Friday as we come into, what's it been, 3 straight weeks we've been higher. This week doesn't look to be the case, but man, as our man Basil Chapman would say, the day is young, folks, with the NASDAQ right now off 1.2%. Russell off by almost 1.4%. You get the S&Ps off 0.8%. You get the NASDAQ 100 off 176 points, off 1.2%. All right, let's talk a little bit of chicken and beef. Interesting story out there from Bloomberg. I think this is their big take, is it? Not sure. Maybe it's not their big take. Sometimes it is. It's quite an article that they have here. And this was out early this morning. And it's talking about chicken versus beef. Now, I'll tell you, folks, the way I feel healthiest, okay, is not some crazy version of ketosis, where everyone talks about, right, you don't eat carbs. You deprive your body of carbs, you eat all protein. The way I feel healthiest is no processed carbs, no processed sugars. And listen, I eat plenty of processed carbs and I eat plenty of processed sugars, man, okay? I wish I didn't eat as many as I did, but when I feel healthiest, I consume carbohydrates in the form of fruit and vegetables, okay? Eat some lean beef, eat some fruits and vegetables, you get some good healthy fats in there, maybe some olive oils, whatever it is, okay? So, yeah, some nuts are great in there, maybe some beans, etc., okay? Legumes. So I'm biased in this article, and I find it so amusing because when I practice that diet, okay, it comes with usually a decent amount of beef. But I personally find that when I eat too much red meat, my body just doesn't feel good. And you can eat it occasionally, okay, but it just doesn't feel as good for whatever it is. Maybe it's digestion system overall. Maybe it's just too much fat sometimes that can cause some problems maybe in digestion, right? If you eat too much fatty beef that's sitting in your stomach too heavy, something like that occasionally. But it's interesting because I'm not alone, folks, because let's get into the numbers, okay? For years, the world's biggest beef producers pushed back on the health claims and meat labels used by plant-based alternatives because it was worried about losing customers, but the industry got it wrong. Fake meat wasn't the deal. But what was the real enemy was chicken. Yeah. And check out this chart. This alone, okay? Let me see if I can blow it up. There we go. Per capita, per person, per household, chicken consumption has boomed while beef stagnates. In 1980, the year I was born, per capita, every household was eating 45 pounds of beef, chicken and 75 pounds of beef. We are now eating 100 pounds of chicken, and we are eating 56 pounds of beef. That is a mammoth transformation in our diets over the period of 43 years, let alone the trend is not your friend if you're a beef producer, man, and you're a chicken farm or whatever you are, right? They got a lot in there. Duffy, they talk about beef has had a lot of things, talking about whether it's even climate change, talking about beefs contribute to climate change, etc. Okay? Eating beef has been tied to heart disease for 40 years. Cows get blamed for climate change. There you go. What I thought was so cool about this article is how heavily fragmented the industry is. And then you look at a company like Tyson, okay, that just plows money into chickens. There's Tyson. Okay, let's take a longer term look at Tyson. You go back to the 5-year. There's your COVID collapse. You're trading $50 right at the COVID numbers right now. This thing is taking quite a haircut. Now, I back things up. Look at the run that it did have. Okay, from 2012, 2011, you're at $15. You make higher highs, and you make that high at $100, and then boom, you're right back to that same $50 area. That's where you came into 2018. That's where you came into COVID as well. That's where you chopped around almost when you were in 2016 as well. Now, back to some of the numbers, okay? Cattle production is made up of more than 700,000 businesses. Imagine that, right? So it's super fragmented in terms of where you are. Most of those entities are family-owned ranches in Texas and in Kansas. Meat packing, which includes beef, chicken, and other meats, is nearly an additional $300 billion, right? So this isn't even talking about the packing business. It's just talking about who's raising the cattle, who's raising the chickens. For beef producers, a mix of increasing food costs, drought, and competition narrowed profits out there. And the chicken problem looks even more acute when you consider, okay, takeout, etc., and the trends of people and where they are in their just younger people adopting chicken versus adopting beef. Chicken is the hottest part of a nearly $1 trillion U.S. restaurant market. Chick-fil-A averaged $6.8 million in revenue, nearly doubling McDonald's average of $3.6 million. Now, there's a lot less Chick-fil-A's, okay? So McDonald's is, you know, they're eating their own lunch, as in there's a McDonald's on every school block that you can find, right? Versus Chick-fil-A, you got to drive a little bit. So, of course, they're going to have higher revenue per location when you have less locations. But chicken is on the rise, man. And, yeah, chicken versus beef is no contest, okay? This is a poll asking U.S. adults if they ate more chicken or beef, and it shows chicken's advantage. Now, it's everywhere, okay? And it's really dramatic when you go into whether it's, and this is, beef is in the blue, okay? So you got chicken in the black, you got both in the pink, and beef is in the blue. Nobody's eating just beef. If anything, people are basically eating chicken or chicken and beef, and most of the time they're eating chicken, man, and you see it by this chart up here, right? Now, getting into things a little bit further, what they talk about here is, do you remember, and you probably remember, folks, if you're around, beef, it's what for dinner, right? Where'd that campaign go? They just should have stuck with that forever, man. It was a campaign that debuted in the early 90s. It had a huge orchestral soundtrack. Robert Mitchum voiceover. The ad drove two messages: that beef was a part of the American way of life, and it was versatile, with a montage of families eating everything from a porterhouse steak to kung pao beef. Because what's happened is that, and I'm backing things up to jump around here, but it's a cool article, man. I'll post it in the Tiger's Den because it's just interesting to see how trends can change so dramatically. But what they talk about here is that there's so many options for chicken. Let me get into the number. Here we go. In 2022, 4 of the top 10 items on Grubhub were specifically chicken. And you're talking about a chicken quesadilla. You're talking about a fried chicken sandwich. You're talking about chicken tikka masala. Jeez, what is that's one of the top 10 items ordered in the year? Chicken tikka masala? Is that chicken masala? I don't know what that is. And it's one, and it's a head of boneless wings. But nonetheless, you know what beef had? They had a cheeseburger. That's it. The other thing that chicken had, they had burritos, they had a chicken Caesar salad, they have pad thai. Chicken is in everything. We're not as comfortable putting beef in everything, at least in America. And I'd say that agrees in a big way. And listen, I'm jumping around, man. We're going to spend the next we spent a whole segment on this because it's interesting and it is healthy, folks. What I do is I take chicken breasts, I cook them up in the beginning of the week, throw them in my hamburger, throw them in my fridge, and then I take them out during the week. And here's a key, all right? I'll talk about what I do when I get back because it's a super healthy way, man. And yes, it's expensive, especially when you're talking about those fat-free, lean chicken breasts, right? Stuff like that, pretty expensive. But yeah, Costco. We go to Sam's. I load up on chicken at Sam's. Sam's has good chicken, man. They got good produce. I know it's owned by Walmart, but they got good stuff there, man. You got to be healthy, and I know it's expensive, so pay attention. But when I come back, I'll tell you how I cook it up, and we'll finish this article because it's interesting, man. And then what we're going to talk about the money, man. Because wait till you see how much beef is spending versus how much chicken is spending with the likes of just Tyson. Stay tuned, folks. We're coming back for the open. You get the markets in negative territory. It's Friday action. S&P's off by 36. We'll be right back for the open.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den. Available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open, and you basically open at pre-market session lows. The S&P is off 37 points. NASDAQ 100 off 170. Russell off 25, and the Dow off 248. Dow's got a 33,000 handle. You got the S&P with the 4,300 handle, and we got the NASDAQ 100 approaching 15,000, some round numbers. Back to the chicken for a moment, because it is interesting. And, yeah, we're talking about money, and some great comments in the den. Yeah, talking about the beef. So Jimmy with a great comment saying, notice that beef industry seems to cut back on ads relative to pork and chicken. So check this one out, Jimmy, right? This is the part that really I want to get to. You talk about the numbers. This is a finance show. Here are the numbers, okay? Now, they talked about where's the beef, the ads, right? Well, where do those ads come from? You know where they come from? The campaigns are funded by the Beef Checkoff, a U.S. Department of Agriculture program that collects $1 when a cow is sold, okay? Annual proceeds, about $40 million, are spent by the Cattlemen's Beef Board. That's an entity run by the beef industry execs and overseen by the USDA, okay? It's one of roughly 20 research and promotion boards authorized by Congress, spanning lamb to avocados, that pool money in an industry to boost demand through advertising and getting industries to use more of their product, okay? They're the reason why pork was coined the other white meat, and Pizza Hut baked cheese into their crust. Not sure the Pizza Hut one. I guess, they're trying to get other companies to use their products, etc. Chicken, unsurprisingly, does not have one. Okay? So, what has also happened here, that the beef board was created in the 1980s, okay, and that's when beef was at its peak of 94 pounds per capita. The ads and the group's activities may have helped slow the shift, but it hasn't stopped it. One hurdle is that the funding has languished because it's been at $1 a cow since inception 40 years ago. So not the same dollar, right? You were at $1 a cow 40 years ago when we were consuming almost 100 pounds per capita. You're still at $1 a cow 40 years later when the dollar isn't worth as much and we're using less than half of the beef that we have. Okay, so last year the Beef Board spent about $20 million promoting beef to U.S. consumers in its annual report. You got Tony Romo in there they talk about as well. The ads are amusing, but only $2 million was spent last year to run them on national TV. Did you hear that? Only $2 million spent on national TV, okay? That's just 1.2% of the roughly $150 million allocated within the meat and seafood category. Meanwhile, Purdue Farms, how much did they spend? 20 times that. And I'm surprised they only spent about $40 million, Purdue. But yeah, so you got Purdue Farms spending 20 times what that beef board is spending nationally. And yeah, one of the things they talk about is that it's a segmented market in the beef. They don't have big players like chicken does. You don't have Purdue in there, right? It's very segmented. And it's so fragmented is the word they're using, lacking major brands, right? We go to the grocery store, man. Most of the time I'm buying, there's some great burgers that I do like to buy there occasionally, pay a little bit of a premium for that premium burger patty already made, whether it's a prime Wagyu, whatever they market it as, right? But most of the time I'm buying like Publix ground beef, something like that. Versus you look at the chicken, there's a number of great chicken brands that are out there, etc. U.S. cattle industry made up of thousands of ranchers. Yeah, so it's an interesting one, man. Now, what I will say, getting in, so chicken, what I do is, right, folks, I just find a good marinade, man, get some good chicken breast, put it, either grill it, I love grilling it, okay, but then what I do is I save it in a Tupperware in the fridge, okay. Chicken's good for 3 or 4 days usually. You put it in the fridge. And what I'll do is, here's the key. This is the key. Listen up. It might be the best thing you get from this show, man. If you really start getting into a groove, eating healthy, is I take that chicken when I'm reheating it, okay, and I chop it up into small pieces. It doesn't have to be bite-sized, but just smaller pieces that I'm going to saute in a frying pan. Put a little olive oil in that frying pan, right? Put the chicken in there, and I'm telling you, folks, because dry, reheated, fat-free chicken breast is not that tasty, okay, even when it's marinated. So the kicker is you put a little olive oil in that pan, you roast it up with a little olive oil, you reheat it, it gets it a little bit juicier, a little tastier, and yes, it adds some fat, okay, so if you're really worried, you're adding fat straight out to it, but it's delicious, man. And then the kicker is, I'll leave you with, roasted Brussels sprouts, folks. Listen, you may think you don't like Brussels sprouts. It's probably because you just never had them done the right way. It's very simple. Take some Brussels sprouts sometime, okay? Look it up. They're one of the healthiest vegetables you can eat. They are cruciferous. They got a lot of fiber, so don't eat them late at night. They might give you an upset stomach digestion because they do have a lot of fiber, but super healthy for you. And all you do, folks, you cut them in half. This is the key. You cut them in half first, okay? You don't want them in the big, because many times I have Brussels sprouts at restaurants, and they're still so hard, and I don't like that, okay? I want my Brussels sprouts crispy, toasty, well done in the oven, okay? So you cut them in half, and all it is olive oil, salt, and pepper. And if you want to put some garlic in there as well, I have some garlic olive oil at home that I love. But I was just Googling. I mean, it's real simple, folks. You're not going to forget it. You take the Brussels sprouts, you cut them in half, you mix them with salt, pepper, and olive oil, and you roast them in the oven at about 400 degrees for about 40 minutes. Maybe flip them around once or twice if you want to. I'm telling you, folks, it is delicious, man. And so when I look at that chicken, right, it's not surprising, folks, because I'm right there. You should see the amount of chicken I buy in my household. I'll buy 3-4 pounds of it, cook it all up on a Sunday, have it Monday, Tuesday, Wednesday, Thursday. And listen, I'm telling you when I'm good, okay? I'll also plow through, a pint of Ben & Jerry's Reese's ice cream or Netflix and chilled ice cream or something like that, okay? We all have our splurges. But this trend is not going back, I believe, because you look at the trend of young, you look at older, what it is, and who knows, as I talk about this, right? Maybe you look to buy some Tyson in the future, man. Not today, though. Tyson down 0.6% for Tyson, and it's been a one-way trip, man, as they've had, the bird flu weighing on them from $100 down to $50. Pretty remarkable. You're at COVID lows for Tyson. And when I back that up, because chicken's going nowhere, folks, and it is. It's a healthier food. Red meat is great in your diet occasionally, but I just know how it feels. And it doesn't feel as good on my digestion, etc. But boy, that's quite a level. Maybe you look to get back to $43, $44, but you're talking about getting in Tyson where it was 8 years ago almost in 2015. All right, we're done with chicken. We're done with food. We're going to talk a little bit of market. Let's get around to the FANG stocks, folks. Maybe we'll do a health show at some point because it's important, folks. You can't do anything if you don't have your health, so pay attention to that stuff for sure. Yeah, and thanks for posting that, Matt, because it's important the type of beef you're getting too, and that's the tough part, right? That most of the time it's expensive, and that is the battle. That you're talking about healthy chicken, healthy beef, it's expensive. But pay attention to your health because it makes everything better in life. Even trading, man, you get your head on straight, you're feeling good about your health, you can focus in other areas of your life. That's what I found over and over through my years in terms of when I'm feeling good. Yeah. And yeah, it's not bad in bulk if you buy it, stuff like that. Get a nice freezer, etc. You just got to be more conscious of what you're buying, where you're buying, how you're storing it, etc. All right, Apple shares negative by about 0.6% this morning, 185.82. No real pop for Apple. I've been saying they were getting pops. Microsoft shares off by more than 1% this morning. We jump over to Google shares off by 0.7. Meta shares off by 1.5%. All right, we got negative action on Friday, man. We're 8 minutes into the trading day. You get the NASDAQ off 1% on the dot. Russell off 1.2. Stay tuned, folks. We'll go over some of the other equities moving this morning. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&Ps off by 33 points right now. You're trading at 43.90. We jump around to the gold contract. Let's go a little bit. And we got gold up by $20 right now at 19.43. We jump over to the 10-year. 10-year up by 20 ticks right now, 113.11. And jump over to the dollar index right now. Dollar index 102.80. Let's see how the VIX is behaving with some negative action in the market. Yeah. All things considered, right? 1360, and we get the market selling off. You get the S&Ps off by 0.8% at 43.89, and the VIX is saying, "Hey, I'm comfortable at 13, man. I'm comfortable at 1360 in this market. Pretty resilient, to say the least." All right. Yeah, we have to talk this up for a second, man. Sad, of course, for the 5 people on there, and you wonder what they knew exactly. That's what I find myself wondering. Were they aware of everything going on there? There's so much that comes out, right? I mean, this has been out for a couple of days, man. I'm just literally cherry-picking internet articles when I'm Googling things. But did you see the story about how they had all this verbiage on their website talking about that they had partnered with NASA and Boeing? And, of course, you have those companies coming out saying that that was overstated at a minimum. We did not provide any approvals of the project. Yeah, the company, this is OceanGate, said in February they partnered with NASA and the agency's Marshall Space Flight Center in Alabama would serve as the facility where the development and manufacturing of a new aerospace-grade hull is completed. There's a lot of grandiose speak, man, and that's one thing if you're selling something, but it's another thing when you're selling people to jump in a submarine and go down a couple miles, to say the least. Yeah, and then you had one of their safety directors, right, talking about, what's this guy, Lockridge, right? What's his name? Yeah, nonetheless, really just be aware when you put yourself in these scenarios. Sounds too easy. Sounds like something we all know. But I don't think that's the case, man. And I think a lot of people that were probably jumping on this thing weren't really calculating the risk that they were putting themselves in. And I think we're going to see a lot of stuff come out, folks, in terms of what is going to come out, in terms of who knew what said what. Yeah, David Lockridge. He was the former director of marine operations for the company. And he claimed in 2018 that he was basically fired for talking about the safety of things. One of the things that they were talking about there is that porthole that they had. They talk about it in this article. The porthole they had, no, they don't. But one of the big issues was that that thing was only potentially rated to go down to 1,400 meters, and they were going down to 4,000 meters. There's the composition of the hull they're talking about in the den this morning. That's obviously a big one as well. And then I was reading articles on David Cameron. James Cameron, David Cameron. Now, you look at the vehicle he built, okay? And that was one of the coolest things that I learned about in all of this. To looking at the vehicle they built, the testing they went through. One of the things that got said that struck me most in terms of the quickest reasonable grasp of how you could have come to the conclusion as a layman with no understanding of things, right, is that what James Cameron had built. Okay, what was it called? The Challenger? What's his vehicle called? Maybe somebody in the den can help me out. I think it's the Challenger or something like that. So yeah, the Challenger Deep. Of course, we got to have a name on top of it. Can't just be the Challenger. A similar sized vehicle. Now, Cameron's vehicle was a vertical vehicle. Okay, so it's almost like you're sitting in it. It's a vertical vehicle. Imagine like a bowling pin or something like that. Not really, okay, because it's just one vessel. But the space for him in that vehicle was basically one person, one cockpit, barely enough to fit a human being, and everything else in that vehicle was getting used for pieces of equipment, right, for that vehicle. Well, you had the Titan from OceanGate. That's the same type of vehicle, and meanwhile, you sit 5 people in this big, spacey area. Meanwhile, the Challenger Deep was full of different things. It's a bummer when you look at it in hindsight, and I imagine that they knew more than they thought. And, to a certain length, right, the CEO, yes, it would have been more evil if you're just building something that you don't believe in, charging people money and putting them on that ship and you don't go on it yourself, right? But there is something where he may have been aware of the risks he was taking. He was comfortable with them. And then putting other people in that position, he didn't want to have to answer for that, and he doesn't have to answer for that, because the only way that he'd ever have to answer for that is if something goes wrong and he's on the ship and he's not there to answer for it as it goes. So there's that element of things. Yeah, you get the carbon fiber composite hull. I mean, we've all gotten an education if you've been watching the news, man. Just make sure you really do your due diligence, because there was a tweet I saw from a gentleman who runs some type of show on Discovery, right, exploring, and he met these gentlemen early on in their endeavors with the Titan. He got a ride on it, but just underwater, not going to the depths of the Titanic. And he actually turned down an opportunity to go down to the Titanic. And he said it was a huge opportunity because he would have gotten to film the Titanic himself, right, as an explorer, somebody with a TV show, huge opportunity. And he passed on it because of safety concerns. And his tweet out there was saying that, there's more out there that people haven't even gotten to yet. And I imagine there's a lot more out there, folks. When they went missing, right, they didn't contact the Coast Guard for 8 hours until after they went missing. There's tons of reports that they would lose contact with the sub over and over on almost every mission. So, you put yourself in a position like that, all right? This isn't to harp on the sadness of things. This is to just reiterate that I think we all come across situations like this occasionally in our lives, and you don't realize how important those decisions could be until they go catastrophic. And I always say, if there's a probability of something happening greater than 0, you better be running the risk-reward analysis in your head, okay? Because if there's a probability of something happening greater than 0, you run it enough times, it's going to come through. And make sure you're comfortable with those risks. And I imagine the people on this ship had not been aware of the risks. I mean, the poor kid, the 19-year-old kid with his dad. Story comes out yesterday that he wasn't too excited about the trip, to put it lightly. His aunt was talking about it. He was anxious. Normal stuff for a 19-year-old, I'm sure, to be anxious. But a tough deal, and, going down across the board. And it's tougher when it looks like it was preventable, right? And, yeah. And the irony of it is that you now have, what's his name, Stockton Rush? He is now on the same list as the Titanic creator as people killed by their own inventions. I mean, Wikipedia's got a list of it. It's pretty remarkable that they are now on there. I was listening to an interview from James Cameron talking about the mere similarities as well, in terms of you had the pilot from the Titanic, okay, the captain of the Titanic, not heeding warnings, steering into ice that night at full speed, not being aware of the warnings that people were talking about, etc. And meanwhile, you have the same thing going on with the sub. They were warned tremendously. He pressed forward. He pressed to that same area. And yeah, it's a tough one. But listen to yourself in those moments, folks, all right? This is a sad deal for those families, without a doubt. And not to say you can learn something, but it's remarkable how in hindsight things seem so clear, right? You say, who was jumping on that? But that wasn't the case ahead of time. Remember that, okay? So be willing to make those tough decisions to say, you know what, I want to go, but I'm not going, because I'm going to listen to that voice in my head. Stay tuned, folks. Markets sitting at lows. We'll be back for one more segment.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&P negative by 34 points, trading at 43.89. NASDAQ 100. We just got below 15,000, man. Let me zoom back out for a moment. Yeah, you just got to a 14,985 print. We're off by 200 points. The Dow off by 185. The Russell catching a bit off that low. Check that out, right? Russell just jumped 13 points. We're at 1850 right now in the Russell. Quite the move. Okay, as we finish it up, one more conversation about the ship, the sub. Oh, let me find the article. Oh, forgive me. All right, I'm going to have to jump around. I got too many good articles up here. Ah, what a bummer. All right. I had it all ready. Is that it? Nope. What it was talking about, folks, was that same deal in terms of that basically that lookout port was only guaranteed to work till 1400. You get the composition of the hull as well. But yeah, not many people probably knew that. All right, what else do we have? Let's talk a little bit of banks bailing out and venture capital as we wrap up the program. And this is the one that's a bummer of Sequoia, and you got a Chinese tech firm parking money with Silicon Valley Bank, getting all the upside of banking with a bank like that. As in, there's a reason that they were banking with a bank like that, okay? They were banking with a bank like that for whether it was versatility, whether it was yield, whatever it was. And they put all their money there with a private business. That private business went BK. And our government decided to bail them out. And you check out the numbers, man. Sequoia had $1 billion with Silicon Valley Bank. And some of the other numbers are in there big as well. Top 10 accounts, there's Sequoia at $1 billion. You got a bunch of them, man. Just pretty remarkable how that number goes up there. And they all get bailed out. And I'm not sure that should be the case because they were getting benefits by being at that bank. And that's the real worry as that marches forward. All right, folks, that was a quick hour. Thanks so much for starting the day off with me. Basil did his show at 8 a.m. That's coming up right now. I appreciate you starting the day off with me on Friday. We got the market down 35 points. Stay tuned, folks. We got live programming coming up after that. Have a great Friday, everybody. See you on Monday.